You could think of Bitcoin as the apex commodity. The top competitor would be gold, worth $10 trillion. And if Bitcoin's digital gold, it's better than gold. And it's better than gold because it's got an absolute supply cap. The production is rapidly approaching zero. After 2035, there effectively isn't any material new production of Bitcoin for the next 100 years.
Hey guys, welcome back to Everyday Finance. In this video, Michael Saylor discuss about Bitcoin. According to Michael Saylor, examining the 4-year simple moving average of when you look at the supply of Bitcoin, you find that it is roughly $560 billion has been invested in the wrong thing. $560 billion is the amount have been made in this network, and the money put here helps to safeguard the network. Therefore, you can anticipate that those who invested the $560 billion would do all in their power to safeguard its resources, power, and lastly, you have almost 220 million holders. People possess Bitcoin to some extent, and among those 220 million people additionally, they will utilize their political clout to defend the network. Thus, when you invest in how does Bitcoin compare to other products, you can purchase on that platform, given that it is safeguarded by 4 different forms of power. Chart. You could consider Bitcoin to be the ultimate commodity, and its main rival would be gold valued at $110 trillion. And lots of things Michael Saylor discuss, so please watch the video to end and share this video and subscribe our channel Everyday Finance. Thanks.
Many people say, well, Bitcoin's not backed by anything. What's it backed for? It has no intrinsic value. And they grossly misunderstand the network. Bitcoin is secured by 4 types of power: computing power, electrical power, economic power, and political power. And if you don't understand these 4 types of power, then someone's going to trick you out of your Bitcoin, or you're going to make mistakes. So, for example, the computing power is 460 exahash. That's all of these millions of Bitcoin miners, custom silicon, and they are channeling 16.5 gigawatts of electrical power into 460 exahash. Now, 16.5 gigawatts is 20 basis points of the power in the world, so it's a small fraction. But 460 exahash is what makes Bitcoin truly secure, because that's all the computer power in the world. If you wanted to redirect all the computers at Google and Amazon and Microsoft and all of the iPhones to do hashing of Bitcoin, they're probably not going to generate 460 exahash. So it's the custom silicon which converts electrical power into computer power, and they're both important. Arguably, it's a lot easier to come up with 16 gigawatts than 460 exahash, because all the hash power is owned by the Bitcoin companies that are securing the network. Now, to put this in perspective, 16.5 gigawatts is more power than the energy used to propel the entire United States Navy. All of the aircraft carriers, all the destroyers, all the ballistic subs, the entire Navy runs on a bit less than 16.5 gigawatts. So that's a lot of power. 460 exahash is all the computer power anybody else can muster. But that's not the only thing. Bitcoin's secured by economic power. And if you look at the 4-year simple moving average of Bitcoin, and then you look at the supply, you conclude about $560 billion have been invested in, the M is wrong, it's $560 billion have been invested in this network. And so that money secures the network. And you got to expect that the people that invested the $560 billion are going to protect it using all of their resources and influence. And then finally, you've got about 220 million holders. 220 million people have some ownership of Bitcoin. And those 220 million people, they're also going to use their political influence to protect the network. And so when you're investing in Bitcoin, you're protected by 4 types of power. Now, how does this compare to everything else you can buy on that chart?
According to Michael Saylor, how does Bitcoin compare to other products you can purchase on that platform? given that it is safeguarded by 4 different forms of power. Chart. You could consider Bitcoin to be the ultimate commodity and its main rival a $110 trillion piece of gold. And if Bitcoin is digital gold, it's superior over gold. And the reason for this is that it has an absolute supply cap and produces quickly, approaches zero. You understand that there won't be any new material beyond, say, 2035, because there is a 100-year supply cap on Bitcoin. People compare it to other cryptocurrencies to gold, but Bitcoin is gold, a kind of pharmaceutical-grade gold, without the risks or obligations associated with real gold. Systemic inflation in gold is expected, as miners produce more of the metal, which is challenging to audit and exceedingly challenging to transition. The cost of custody is high, and the cost of authentication is even higher. These are the only known drawbacks of gold, and the only reason we can be certain it doesn't work is because gold hasn't been increasing in value for a considerable amount of time, and Bitcoin finally addresses that issue. Let's back to the Michael Saylor interview.
Well, you could think of Bitcoin as the apex commodity. The top competitor would be gold, worth $10 trillion, and if Bitcoin's digital gold, it's better than gold. And it's better than gold because it's got an absolute supply cap. Production is rapidly approaching zero. You know, after 2035, there effectively isn't any material new production of Bitcoin for the next 100 years. And that means we're totally capped. And so people compare Bitcoin to gold, but Bitcoin is gold without the liabilities and the risks of gold. It's kind of pharmaceutical grade gold. Gold is going to have systemic inflation. Miners are going to make more gold. It's hard to audit. It's very difficult to transfer. It's expensive to custody. It's very expensive to authenticate. Those are all the liabilities of gold. We know about that. The reason we know it doesn't work is because gold has not been appreciating in value for quite a while now. Now, Bitcoin solves that problem, but it enhances gold with digital audit, digital transfer, digital custody, decentralized robustness, integrity. It's got a global utility and appeal, and the technology industry is enhancing the value of Bitcoin. One day you will see every smartphone in the world will have support for Bitcoin built into it. And even right now you can download dozens of apps that handle Bitcoin. And so you can't download any app that moves gold around. And that's why Bitcoin is the apex commodity. It's just better than gold. But to say that and stop there is really underselling Bitcoin, because Bitcoin's also the apex property. You could think of it as Cyber Manhattan, 21 million blocks in cyberspace with appeal to 8 billion people worldwide. What if everybody wanted to live in Cyber Manhattan? The top competitor in the property market is New York, or London, or Paris, or Tokyo. And if you owned a city block in New York in the last 100 years, you probably made a lot of money. But the problem with owning buildings in New York is you have maintenance cost, depreciation, zoning risk, property tax, physical nexus. You can't move the building from one city to another city. It's immobile. It's illiquid. And if you want to sell or buy the building, you have to sell it all at the same time. And it's very expensive to do that, and it takes a lot of time. So Bitcoin improves on that by creating a building that's indestructible, immortal, immaterial. You can scale it. You can buy it $37 at a time. You can move it with high frequency. It's portable. It's global, universally desirable. And, it's like owning a building, but if you're going to own a building in Buenos Aires, why wouldn't you have a building that you could teleport to London, Paris, or Japan when you needed to and sell it? It's just a much better idea. So Bitcoin is better property than any kind of physical property. But Bitcoin's also the apex technology, right? It's a bank in cyberspace run by incorruptible software. It's open to everyone on Earth. So you could think of it as digital finance. And the top competitor in technology is Apple. Apple's the most valuable company in the world, but right behind it is Google and Microsoft and Amazon, and big tech is an obvious good idea. But what if I could actually have a digital monopoly that's global, that everybody wants, but without the management team, without the employees? Right now people want to unionize Amazon. They're talking about unionizing Tesla. Well, you can't unionize a company that has no employees, that is no company. The management's never going to screw up if there is no management. You know, you've got corporate taxes and tariffs and product cycles. You know, we're on the iPhone 15. You know, what about the iPhone 37? Will that be the one that you want? Because Bitcoin in 100 years is going to be 1/21 millionth of all the money in the network. So the product was set a decade ago. It'll be the same 100 years from now. It may be the same 1,000 years from now. So getting rid of product cycles and getting rid of all the liability risk that comes with corporations, you know, is a big upgrade for Bitcoin. And what you do get is this global network of holders. You get legal and ethical superiority because, you know, a commodity is always superior to a security because there is no issuer, there's no management team to mislead you. You don't have to trust, you can verify yourself. And there's really no operating risk or execution risk because it's just running itself in a timeless fashion on a global basis. So if you like technology, then Bitcoin is the apex technology. But some people invest in money. And what's the top competitor? The sovereign debt, right? A bond. So the U.S. Treasury bond is the treasury asset for most corporations, most governments. There's hundreds of trillions of these bonds out there. But Bitcoin is digital money, and so it's a non-sovereign bearer asset. It serves the value of a bond, but it doesn't have systemic inflation or counterparty risk or mandatory custodians, and it doesn't have the real problem, negative real yields. If the monetary inflation rate is 7 or 8% and the bond pays 5%, the after-tax yield is 2 or 3%. So it means you've got a negative real yield of 5%, which means your money's going to go away. It's going to be cut in half every 14 years. And every bond, every sovereign bond has a negative real yield in every country, always. Bitcoin, on the other hand, is digital. You can self-custody it. It appreciates much faster than fiat, and it allows you to escape the local currency risk. So, and it's the longest duration asset. You know, a bond could be 30 years, but Bitcoin is forever. Bitcoin's a 1,000-year asset. I mean, it doesn't expire. Companies don't last 1,000 years. Buildings don't last 1,000 years. I mean, I guess the closest thing to something that might last 1,000 years is a bar of gold, but gold isn't scarce. You know, when the Spanish came to the New World and the conquistadors stole all the gold from South America, they brought it back to Spain. They created massive hyperinflation and tripled the supply of everything and crashed their own economy in Spain and the rest of Europe. So there's always been inflation, even in gold on the gold standard, because it's not scarce. And now a lot of talk about the ETFs coming. Bitcoin's going to be the apex ETF. You could think of it as a global monetary network. It's the first ETF that's based on a synthetic asset with an absolute fixed supply that also has global appeal. It's competing against the S&P index, the SPDR, SPY, and it competes against some other monetary ETFs like GLD or BOND or the NASDAQ index, but ultimately, Bitcoin is destined to rise above them as the global index because it doesn't have asset inflation. All these other indexes have asset inflation. If you buy billions of dollars of the S&P index, it cranks up the stock price of all the companies in the index. They issue more equity. They basically dilute their own stock, right? And so you're always going to create more of these things. Bitcoin's the only ETF and the only index that is absolutely capped. And if you combine that with the global brand appeal, the lowest investment risk, the best growth drivers, the best tax treatment, right? The longest holding duration, what you've got is the winner. Austrian economists would think of this as the world's first engineered sound money. You know, Austrian economists have been looking for sound money. It used to be people thought gold might be sound money, but as I pointed out, gold was an imperfect attempt at sound money. We have never in thousands of years ever actually accomplished perfect sound money. Bitcoin is the first monetary asset that is not intrinsically defective. That's a big sentence. Think about it. It's the first non-defective asset. People will build, if you double the price of real estate, they'll create more. If you double the price of a stock, they'll create more. They print more fiat currency. They mine more gold, but nobody can create more Bitcoin. So this is a big idea. And so here we get to the orange pill moment. I mean, the reason you want to go and orange pill everyone you know is we finally have an asset, Bitcoin, the world's leading. It's the leading scarce, desirable, portable, durable, maintainable asset. If you remember, you know, where I started in this presentation, I said, if you don't want to lose the economic war, you need to find something scarce, desirable, portable, durable, and maintainable. We've found it.
According to Michael Saylor, if you enjoy technology, Bitcoin is the ultimate technology. But some individuals make financial investments, and the leading rival is government debt, bond, meaning that the majority of government assets are US Treasury bonds. Most governments, corporations, there are bonds worth hundreds of trillions in circulation. As Bitcoin is digital currency, it is not a sovereign bearer asset. It fulfills the function of a bond, but is free from systemic inflation. Or negative real rates are not the true issue, nor is counterparty risk or required custodians. If the bond yields 5%, but the monetary inflation rate is 7 or 8%, 3% or 2% is the yield after taxes. If you learned something from this video, then please like this video and subscribe our channel Everyday Finance, and we will meet in next video. Thanks.